Well, thank you for joining me today at the weekly update. We're going to get right into it. Um, if you have any questions, make sure to send them to service@o'harewealth.com, or you can always text us 414-644-0060. First question and only question of today. What do the changes with the tariffs mean for the market and the possible recession? Well, I'm going to keep this one pretty short. I think what they're talking about is some of the tariff deals we saw in the 90-day delay for the Chinese deal over the weekend. The market reacted very positively to it. As a matter of fact, as of today, the 14th, we are within a margin of error, basically, of the start of the year's numbers. We've recovered almost everything that we lost after Liberation Day. And I guess the real question is, what changes does this mean for us? It doesn't. When we started this year, we were very adamant that it was going to be a tough year to make money, despite the fact that we expected a strong economy and very good earnings growth, which it kind of looks like we're still going to get. Recession territory, that talk, we very much eschewed that earlier. Uh, it seems like many people that said we had a 50% or 60% chance of recession just a few weeks ago. By the way, remember, Liberation Day was 6 weeks ago. Just a few weeks ago, 4 or 5 weeks ago, said we were for sure set up for recession. Have now quietly backed away from those things, and we are getting more and more trade deals, and there's hints of more trade deals all the time. And something I know we've said before is, those tariffs we got that day were probably the worst case possible scenario, and everything less than that is a net win now. And we're probably going to get more trade deals, and even if somehow all the tariffs from that day came back and were reinstated, it would be a lot like watching a scary movie for the second time. It's really scary the first time, and it's moderately scary the second time. But we're also watching US businesses and US consumers find ways around these things already and make them even less effective. So for us, what we said before is tariffs were going to be a problem. The tariffs we got on Liberation Day were far in excess of what we initially thought they were going to be. But now, kind of the idea that they might become 10% global tariffs goes back to our original thesis of a 1% PCE inflation increase. And we just recently here had very strong economic data. We had strong jobs data. We had cooling inflation. We had lower than expected CPI inflation here just recently. And we had growing consumer demand. And that, growing consumer demand, cooling inflation, uh, you know, really the only surprise was the negative GDP number, which came from massive new imports. Which, why would anybody want to import a lot of things in the first quarter? Well, because they thought there were going to be tariffs on them in the second quarter. And if you buy a whole year's supply of something in one quarter, that's a negative number toward GDP. And it was not usually that it's always a negative number, but this was an extreme case where it was an extremely negative number, which far exceeded what we usually see for imports. It's because people are trying to get ahead of the tariffs. But if you buy a year's worth of stuff, well, it means you're not going to buy that again for another year. So, yeah, we expect that to be sort of a one time GDP fluctuation as a result of expectations of tariffs. But it doesn't change our overall outlook for recession. If the consumers have jobs, if inflation is cooling, if people are continuing to spend more, that doesn't line up well for a recession. So what do I expect right now? I expect that we're going to keep getting trade deals. I expect that they're going to be coming. There's going to be more delays. There's going to be more 90-day reprieves, and that's not the best case scenario. We'd obviously like it to be settled and over with and completed. But much like if you go back to COVID, our expectation was that eventually we get a vaccine and people would go back to traveling again and life would return pretty much to normal. And there would be some things that were left over, vestiges of a time, Zoom calls, more video, be able to work remote. The fact that business class travel wasn't going to come back as strong. Those are all things we thought would probably happen, and it looks like those things are happening. This is the same thing. It's still a little bit nerve wracking because you'd like to see these things settled, but ultimately, we're getting a lot more clarity around these things, and we don't think we're going back to what most people would describe as the worst case scenario. So everything from there is just a net win. But yeah, where we're at today, we're basically back to where we started the year, which is not that fun considering we're coming up on June here in just a few weeks. And it might mean that we're going to be in this trading range for a little while, but it also means we probably have set a bottom on the market, at least for this crisis. The strong action, the deals that are coming through, This is all very, very positive news. And right now, positive news is just status quo. Really, to get more negative news, you have to have big new surprises in trade policy, which we just don't expect. Now, nobody expects a surprise, but if you're going to ask me which way, trade and tariff policy is going to go, it'd be going the same trend that it's been going for several weeks now, where it's been getting easier and there are getting more deals and more understanding, and we're getting our head wrapped around more and more what this is going to look like long term. So for us, does it, you know, what does it mean for the market? We still think this is going to be a tough year to make money. And so far, considering we're flat, this really feels like it was a tough year so far. And what do we mean for the possible recession? Like I said, many experts went and had huge raises in their recession expectations. We don't think that's going to happen. Are there still disruptions? Of course. There was a couple days there where China didn't put anything on a ship basically and send it to us. It's going to take a while to sort of get that back. It takes several weeks for ships to come across. There's still lingering effects from these things, but it's not continuously getting worse. And I think that's the key takeaway. So we do expect things to get better, and we're actually looking for a much more positive second half of the year, and probably very strong earnings growth. With that, this month's book, Five Types of Wealth, we did a quick review of it, which you can click on just here. And with that, I'm going to let everybody go. Thanks everybody for joining us, and hopefully we'll see you at the next one.